Hi and welcome to HODL. HODL is our new video series where I, Johannes Wiik, and our chairman, Andersen, is sharing our perspectives on how we see the Bitcoin industry is evolving. HODL is a way for us to connect with our community, but also a platform where we want to dig into ideas, share our thoughts, and discuss how we see the Bitcoin industry is developing. So, if you're interested in H100 and the Bitcoin industry in general, we are glad to have you with us. Welcome to HODL. So, to kick things off, what's the latest updates from H100? Do you have any updates to share?
Yeah, so over the last few months, we have been in a path where the overall market sentiment has been more negative than many of our industry participants expected earlier this year. But the main takeaway from that is that the institutionals are coming in a big way. Over the last few weeks, we have seen Vanguard doing a total 180-degree change on how they view Bitcoin. Bank of America is now give their recommendation to allocate to Bitcoin. And now basically the whole financial system are now adopting Bitcoin. And we see the same in the Bitcoin treasury space, where they're more curious. Of course, it's processes that takes longer and in a very different way compared to how this industry started. But more importantly, we see the market evolves and we see more credit instruments entering the market. And I also think that where the current MNAVs is today, M&A is a big topic going forward.
Interesting. So it's safe to say that we have a lot of interesting activities going on in H100.
Yeah, it's been I would say like a couple of challenging months, because as a public company, you can't always communicate what you're working on. So even if you feel that you have an amazing progress internally, it's not always what you can share with the community. But I'm very optimistic about January. I think we have delivered on a lot of the things we have on operational Svalbard, which we communicated earlier. So overall, I'm super happy with the progress. I think we have a lot of exciting stuff going on. But yeah, it's always a challenge between what you can share and what you can't share when you're a publicly listed company.
Absolutely. And moving over to the biggest headline of the industry last week, where we saw Strategy announce that they have established a 1.44 billion USD reserve to manage the Bitcoin volatility. So could you just tell us what's that headline is about?
Yeah, so Strategy this year has issued some very interesting and super innovative credit instruments, where they have they're giving in most of the projects a yield above 10%, which in fiat terms is very interesting. And what's interesting with the product is quite over collateralized. Their Bitcoin stack is many times the amount of what they need to pay, and even like how much they have issued. So it's an over collateralized credit product. But the industry saw that since most of it is in Bitcoin, and Bitcoin is quite volatile, Strategy decided to raise cash, to have 1.4 billion of cash into their balance sheet. So they knew that they could pay 1.8 times the amount they owe per year, which gives the credit investor, but more importantly the equity holders, more comfort around their ability to pay the interest without selling the Bitcoin or liquidate the Bitcoin to pay their interest.
Very interesting. And talking about selling the Bitcoin, we also heard Michael Saylor say that they could be willing to sell their Bitcoin if they trade at below 1 mNAV.
Yeah.
What's your thoughts on that?
I think it's from what I understand is that Michael said that he has different options. was basically a warning to the broader industry of Wall Street that, hey, I have different tools in my toolbox and I can use it if I need to. So it's no point of squeezing Michael because he has the ability to, in a scenario where he can buy back shares, sell Bitcoin and buy back shares at a discount. It's it's an interesting move, but also more importantly, he said that he could use derivatives. He said that with this, he called it the Bitcoin is the commodity, and he had the option to also use derivatives to sell derivatives in the market. So I think the main takeaway was that he has more tools and he's willing to use the tools against Wall Street if they are pushing him hard. So I think it's a positive sign to see that we are now at more sophisticated level and we are communicated as an industry to Wall Street that you can't just squeeze us and we'll sell the Bitcoin. It's actually like more sophisticated view on how we can fight back.
Yeah, very interesting. And when we are talking about strategy and Michael Saylor, they are also using the term digital credit. And what does the term digital credit actually mean for you? What do you think it's?
So for me, it's Bitcoin is the best digital store of value that exists, and you have now a super liquid, global, non-corruptible asset that could be freely traded all around the world, even the universe if needed. And I think when you are now at the total market cap of $2 trillion, it's very natural that you are expanding that industry with credit products. We have seen that in more or less any other major financial asset classes like real estate, oil, gas, shipping. All of them use leverage or they use credit in one way or another. So this is a digital credit, and what's interesting with digital credit is that everyone can value it the same. It's not a local market, it's actually like a digital native market, and it's even if you are from the US or France or Norway, you don't need to look at it different. The only thing you need to know is that is the Bitcoin there, how much Bitcoin it is, and how much credit are you willing to give against it. And that's now, puts us in a situation now where Bitcoin treasury companies are issuing credit instruments, but we're also seeing a huge growth in demand of Bitcoin-backed lending in general, and that's where I think a lot of institutions are coming in, lending against this sound collateral and digital credit.
Very interesting. And do you think H100 or similar companies will take any inspiration from what strategy is doing right now? Do you think it's the new playbook for the industry?
So I think what's interesting with what Saylor has done, he both issued credit instruments in the US, but he already started in Europe. And if you take the credit he had issued in Europe, it's actually twice the amount or size of the biggest Bitcoin treasury company in Europe, which tells us that the US is quite far ahead of us compared to here in Europe. I think Bitcoin as collateral and Bitcoin credit is part of the story on how you create these future financial institutions. And it has to be part of any strategy going forward. But it also involves another type of risk and another type of playbook that are different from what we saw in the phase one, where this equity flywheel was the major race we saw from Bitcoin treasury companies. But if you look to Michael Saylor and how he has raised his capital this year, he's still using ATMs as the main source of funding, but also 6 billion out of the close to 20 billion he has raised. But he has raised a significant amount of money from credit. And very few others have done it. We have seen Stripe in the US already done it. And MetaPlanet has also publicly said that they're going to do it. The question is like, are you only doing it in fiat? Are you also doing it in Bitcoin? I'm quite curious to see, are we going to see Bitcoin denominated preferred type credit products? I think it's a huge demand for Bitcoin native yield in different ways, but it's still very immature. And I think we are now at a stage in general in this industry. The most important thing is to not do anything stupid with a short-term view and have the long-term view and try to build long-term shareholder value rather than chasing the shiny new object.
Yeah, totally agree. So thank you so much for sharing your insights on the industry today, Sander. And we are going to have this chat once a week. So if you have any questions or things you want us to discuss, please let us know, and see you next week.